Inside the masterclass, I talk about so many different rules that you need to know. One of them is Rule 446, all markets, and that is all markets are intercorrelated and also interdependent. What this means is that Bitcoin will move the alts, the major indices will move Bitcoin, and the yields and the Forex pairs will move the major indices, which really means it's going to move Bitcoin and crypto. And of course, also commodities like gold and silver. What you want to do is you want to look through all markets. If you're just going into one specific chart that you're just putting money into, you're probably going to get brutalized by the market. Unfortunately, that's just the way it is. In this video, I'm going to be talking about silver and gold, also the yields, the US 2-year and the US 10-year. Specifically, I'm going to show you how CTKS structure determines price waves. When you have a knowledge of CTKS structure, you literally gain X-ray vision inside the market. We'll also look at the S&P 500 and Solana. If you'd like to get any of the indicators, you can just pop across to ctksmethod.org and pick them up there. Let's run the numbers. Always keep your eye on CTKS structure. Moving between those levels determines the price waves that occur inside market charts, and you interpret one the same as the other. You interpret silver the same as you would interpret Solana, the same as gold, and the same as anything that you would look at. If you would like to learn the CTKS method, which gives you the world's only leading indicator of price, where you can make money from literally any market, I'm giving a very selective number of people a scholarship to Level 1 and Level 2 standard certification. That's where you can learn how to do all of this yourself, and it is the world's most powerful buy and sell level detection system. I'll be awarding a very limited number of partial scholarships to Level 1 and Level 2 standard certification. A lot of people think that applying Level 1 and Level 2 standard certification is very straightforward. After all, they're just horizontal lines, or are they? Level 1 will give you the foundation of what you need to know, but it's Level 2 where all the magic occurs. Literally, inside Level 2 standard certification, you learn everything about drawing those lines up, and you can see it's not so simplistic. It actually is the world's most advanced methodology of determining where smart money is buying and selling, and it will give you X-ray vision. If you're interested in the partial scholarship, please reach out to me. My contact details are in the link section on YouTube. You just click that and you'll find that you can just directly message me on Twitter. Just use that link there. Let's get into applying the CTKS method in practice. It's vital to keep a really close eye on the S&P 500. When we look at the S&P 500 currently, it's all over the place. But why is it all over the place? Is there a structural reason for it? The S&P 500 has been trading since 1871. That's more than 55,000 days worth of data. How do we know what structure exists under this? A lot of people would say, oh, there's structure there, there's structure there, oh, I guess there's structure there. Well, what is the real structure? To answer that question, we turn to the CTKS method, the world's most powerful smart money buy and sell level detection system. Let's pop on the indicator so we can see what's cooking underneath the hood. At the current time, the S&P 500 is suffering this structural level of resistance just below 5260. We can see that we do have lighter structural support below, but what happened the last time we came up to this structural level? We got rejected all the way down to around this 5143 mark. What's happening now inside the S&P 500? We're still under a level of resistance, but the 5204 level is close to a level of structural support. The bullish case is that we come back up to test this 5250 and above. We absolutely need to get above the 5260 and confirm it and go again to maintain bullish momentum. Always have in mind your three-dimensional thinking. Prices can go up, they can stay flat, or they can go down. It's really important to just consider the bearish case as well. The bears will try to seek and push the price down to this 51.79 mark. If they get there, that opens up the 51.61 and lower 51.43 marks. This is the real support and resistance levels inside the S&P 500. Turning to the major indices, we can see the S&P 500 futures have been coming up. They're just in a bit of a retracement pattern at the moment. But Bitcoin, the world's most risk-on asset class, is currently going up. This means risk appetite is inside the markets. Typically, what we see is if the S&P 500, the Dow, the Russell and the Nasdaq were to fall, Bitcoin would also fall. We see that Bitcoin is making its way up. This is quite good for the stock market. Gold and silver have been doing incredibly well recently, and we've seen gold just rally up, but it's starting to pull back. Why is that? Because the yields and the DXY are starting to come up. Also, we've seen a bit of inflationary pressure from oil. Just recently, we saw the VIX spike up, and that created a bit of a negative downturn in Bitcoin. Please let me know in the comments, what do you think will happen when the main markets open? Do you think the VIX will continue to go up, or do you think the VIX will come down? Let's have a quick look at silver and then a look at gold. We can see that silver's price has been mirroring that of gold. Let's pop on the structural levels. Here we're looking at 81,000 days worth of analysis. As professional traders and investors, we need to know where the structure is. And what you can see here, structure is not all created equal. A lot of people think that just one line will do on a chart to show either the support or resistance levels. This has never been the case, especially when you're looking at over 80,000 days worth of data. Now have a look at this. This area just below that 2750 mark is a very strong area now of structural support. We can see we're doing an underside test of this just above that 2783 level. The probability is that we'll go down and revisit the 2750 area, but always be aware that we can go higher, but there is quite a lot of resistance there. This is called a negative fresh air gap because if the price comes down, it's going to come down really quickly. And if the price goes up, it's going to go up really quickly as well. The CTKS method is literally the only methodology in the world that can spot these fresh air gaps either to the positive or to the negative side. Prices can appear quite random until you know CTKS structure. When you understand what the CTKS structure is, especially now let's have a look at gold, which has been trading since 1833, nearly 70,000 days worth of data. Let's pop on the indicator. Our goal is always the same. It's to know and not to guess. Just below that 2342 level, we can see so much structural overhead resistance. And when price gets through it, what does it mean? There are so many sellers here, and they'll all be trying to push the price of gold down. A lot of times, people don't understand why the price of gold comes up, and then it just flatlines, and it just can't get above. If it can't get above, where's it going? You got it. It's going to the safety nets below. And where is it going if it goes up to the next structural level? It's a very simple process and it has a lot of certainty, but you just need to know where the structural levels are. The bullish case on gold is to get above this 2341 and actually above this 2345, so we can challenge this structural level at 2355. You can see it's much lighter. These structural levels are much heavier. When they're heavier and clustered together, that means they're stronger. When we look at the bearish case, we can see that we could drop down to approximately this 23.25 mark. If we fail to hold there, it opens up the lower structural support level just above 23.06. Always keep the structure in mind. It just gives you peace of mind to know where the actual structure exists in market. Typically, most people will look at a chart like this and say, oh, there's a resistance level there, and there's one there, and there's a support level there, and it's not really the case because gold hasn't been trading for a week. It's been trading for 70,000 days. The CTKS method literally gives you an institutional view on the markets. When you look at CTKS, what it's saying to you is that I know where the structural levels are. For example, when we turn back on the indicator, it's absolutely clear that there was no resistance there. It was there. And there was a degree of structure down here, but it's really, really light and even lighter below it. It's not just about resistance and support. It's about confluence, congregation, and strength as well. For example, if you have a congregation, a whole lot of support or resistance levels hanging out together, that makes them stronger, just like any congregation. If you see a lot of structural levels, and especially if they're weighted to the heavy side, that means they're strong. And if they're strong, that means the sellers will seek to push it down to the next structural level, which is exactly what's happened. But this is showing a degree of weakness. This puts the probability forward that we'll move back to the 23.25 level. Right at this current time, the stock markets, it's gaining its strength or weakness from the direction of yields, especially the US 2-year yield, which has been trading for more than 13,000 days. When we see the US 2-year come up, this means that the cost of money is also coming up. And does that mean anything? Yeah, it means a heck of a lot, because if the cost of money is coming up, the cost of servicing that money, the debt repayments get more and more. That comes out of profit, which pushes profitability down inside the stock market. Therefore, we really need to know where are the structural levels. And of course, we're not going to go for the past week. We're going to go for 13,000 days plus. So let's pop it on. By doing so, we're literally releasing the inner X-ray vision of the markets. We can see that the US 2-year yield came up to this 4.771 mark of structural resistance. It was fairly light, but it's managed to catch it, and that's because the US 2-year came through so much overhead structural resistance as it pushed its way up. We still have a level just very close to that 4.8050 mark. Now, if the US 2-year yield comes up to 4.8050, it's likely to get rejected because that is pretty strong. But you'll also note that if we have a bearish case on yields, which is a bullish case for gold, silver, Bitcoin, and the stock market, if we have that, the downside is limited to around 4.7390. Let's have a look at the US 10-year yield. The US 10-year has been trading for approximately 40,500 days since 1912, and we can see just recently the US 10-year, and you can think the 10-year is a representation of mortgage interest rates. When the cost of money gets more and more, of course it gets harder to service that debt because you have to make more and more to do so at the same profitability. So typically what we see, as the risk comes into the market by the yields increasing and expanding, the profitability of firms, especially interest rate sensitive firms, are driven down. The tech sector is very interest rate sensitive, so that's something just to keep in mind. Okay, let's pop on the indicator. Our focus here is to understand the congregation of SLs. These structural levels are very important to understand. We need to know where they are because they will stop any price, and this is the way that you represent any price with these particular levels. There are levels there that are very strong, and there are levels that are clustered. They can be weaker, but they can add up to increased strength. And we can see right above here, here's our structural level above. If the yields go bullish, we would expect this 4.47% mark to get hit. That's where the structure is, and you can see how important it is to know where structure is because it tends to flatline. If it gets above, it's going to the next one. That's why it's vitally important to know where the next structural level is from in terms of the upside or the downside, because we have to always do the risk management. What if the yields come down? Well, that's fantastic for the stock market and for crypto. Bitcoin is putting in a bit of a leg up, which would suggest that the yields are coming down. But we have to keep the actual price momentum in play at all times. Observe is so incredibly important. If we make up stories, as most people do, you'll get caught by the story and then you'll just disregard what is actually happening with price. Keeping your eye on the DXY is also important. I've just popped on the indicator so you can see what's happening here. When the non-farm payrolls came out on this day and the unemployment rate, the DXY absolutely soared because the economy was so strong. So many new jobs were added, but that was very shortly lived. Now, why is the question? Because it came through some very heavy structural resistance areas at that stage. And what happens when you come through so many structural areas? If you can't keep the momentum up, you're going to come back and they're going to act as safety nets. And that's exactly what we've found with the DXY. How you read one chart is how you read any chart when it comes to the CTKS method. This is literally X-ray vision, and it's a forward indicator of price. You can see at that 104.4200 mark, it's hit there again and again, and the DXY has been pushed backwards. If it doesn't show strength of rebounding at a structural level like this, came down, showed strength, and went up to the next one. If it doesn't show that, it's going to the one below. And they can, of course, overshoot. And this happens all the time. They're not brick walls. They're like trampolines. It is very likely the price can come down a little bit further, but it will start to gravitationally get attracted back to that line, as you can see right here. These lines are your X-ray vision inside financial markets. Now, the bearish case for the DXY is to challenge this 104.3400 level and start to fail through. If that is the case and the yields follow suit, that's really good for the stock market. If we get above this 104.42 mark, we can see we've got light structure at that 104.55. and a little bit heavier at the 104.60. But above there is a fairly open area. It's a positive fresh air gap, and that means the price could get explosive. What we seek to do as professionals is just stack the probabilities by our knowledge of what structure is telling us. At the start, you may say, Ken, I have no idea what structure is telling us. Is this thing going up or down? Just remember, price is always moving in a wave-based function. It goes up, it comes down, it goes back up, it comes down. It's not as simple as it's going up or it's coming down, because it depends what time you look at something. For example, yes, it definitely did come down there, but then it actually went up to the structural level. What you'll find is the price is always moving structural level to structural level. All you need to know is where the structural levels are, and you can gain certainty from that. It literally doesn't matter what chart you're looking at. Here we're looking at Solana from crypto. A lot of people still think that crypto is some criminal thing. It's not a criminal thing, except to the banks. To the banks, it's really criminal because it impinges on their freedom to tell you what to do with your money. The banks want absolute control, and dastardly crypto, what does it do? It gives you choice. Oh, can't have that. Let's just wind up the big machine called government and make everybody scared of crypto. Actually, we're talking about structural levels, so let's pop on the structural indicator. What you'll find is the internet was deemed only to be used by criminals and masterminds of fiendishness, and the truth is that was absolute rubbish. It was just a new communication medium. But going back into the early 90s, it was not like that at all. It was something that they thought, oh, this is going to harm the postal service. And guess what? It did. Let's have a look at this structural level playing out just a little above 192. We've seen that Solana's structure has not been able to reclaim that specific level. It has become weaker. So we need to keep in mind that Solana is under a deal of negative price momentum, but it also gains its strength from Bitcoin. So it largely depends what is happening with Bitcoin. Also, the confluence of structural levels around that 170.50 mark is really good. We can see that because Bitcoin has been going up. Now, why do I know this? How do I know Bitcoin is going up? By looking at Solana's chart. If you know how I know, please comment in the video and tell other people, because it's probably more powerful coming from you than from me. Because it means you've learnt something, and you've learnt something very, very powerful. You can see just under that 180 mark is a structural level of support. Support exists below the current price, but it depends where you're talking. If we're talking about this area here, this is support. If we're talking about this area here, this is support, and this is support, and this is support. So many people think there's only one level of support. How nuts. How could there be? If you realistically think of it, you just say that's entirely insane to even think. Okay, let's get back to it. So when we're looking at structural levels, if we're getting above it and we can maintain it, we're going to the next one, which is slightly above 192. That would be pretty good because it puts us back up here. You can see this would say to Solana that this is a bit of a V-shaped recovery. Now, why is that important? Hey, we've got to look at Bitcoin to find out. I've just overlaid Solana on Bitcoin's price chart. Now, what do we notice with Bitcoin? Bitcoin has been going parabolic. What does Solana do? Oh, it's going parabolic as well. What happened when Bitcoin came down? You got it, Solana came down. The alts just magnify the direction of Bitcoin's price momentum, either to the upside or to the downside. Now remember, I was talking about a V-shaped recovery. What are we seeing here with Bitcoin? This previous V, Bitcoin has been going for it. Therefore, we could anticipate that not only Bitcoin goes up, but Solana comes back up and reclaims this position. That could be a very nice little percentage gainer. This brings us to a really important point. How do you see where the opportunities exist inside a market? First of all, if you're inside the stock market, you look at the major indices because they're like Bitcoin to the crypto market. One thing that we can see, Bitcoin is coming up and challenging that peak. What do we also know? Ethereum is getting there. What about BNB? It's still quite a way below. What about Solana? That's quite a way below. What about XRP? Oh, it's getting there. What about Doge? Still underneath. ADA, way underneath. AVAX, underneath as well. This gives you a bit of an idea of what could have the greatest percent potential, and you're always after percentage returns as an investor or a trader. So long as you're understanding the Tier 1, Tier 2 and Tier 3 charts, you're good to go on other particular projects. And you can see that Bitcoin Cash has been inverting everything. Bitcoin Cash has been doing particularly well. Polkadot is still under the pump. Tron is just about back. And what about Link? Well, it's getting there. And Matic also getting there. It's got a bit of room for improvement in there. What about ICP? Getting there and just not quite a standard, probably up to here. So ICP could be interesting. What about Litecoin? Litecoin can get pretty light. So this gives you a little bit of a hint on how you can look at other cryptos relative to the structural levels on Bitcoin and other Tier 1, Tier 2 and Tier 3 charts.